Masih ambil.
Selamat pagi, selamat siang, Pak Triyono. Pak Edwin hadir?
Hadir, Pak. Apa kabar, Pak? Selamat sore.
Apa kabar, Pak Edwin? Terima kasih sudah bisa bergabung. Pak Edichan juga, terima kasih.
Terima kasih, Pak.
Kita bisa mulai, mohon maaf nih saya agak terlambat.
Baik. Oke, kita mulai saja. Good afternoon, ladies and gentlemen. Welcome to CFA Indonesia webinar. Today we are going to cover on the introduction of GIPS or GIPS 2020, one of the product of CFA Institute Center for Integrity in Capital Market. We have the pleasure of the attendance of Eddie Chan. He is our Director in Professional Conduct Enforcement and Global Industry Standards at the CFA Institute. Also, we have the pleasure of our member and also Director of BPJS Kesehatan, Pak Edwin Ridwan.
Tenaga kerjaan, Pak, mohon maaf.
Oh, my apology, Pak. Ketenaga kerjaan. So, and I think we will start without further ado. I will start with a bit of an opening address from Pak Pahala, our President of CFA Indonesia Society. Pak Pahala, silakan.
Terima kasih, thank you very much Pak Triyono, Pak Edichan, Pak Edwin Ridwan, Pak Triyono sebagai moderator. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
A very good afternoon to all of the participants of the webinar an introduction to GIPS 2020. First of all, I would like to thank Pak Edwin Ridwan as well as BPJS Ketenagakerjaan and all of the partners of BP Jamsostek atau BPJS Ketenagakerjaan for allocating time as well as for participating in today's webinar. And of course to Pak Edichan, our speaker today, the Director of Professional Conduct Enforcement and Global Industry Standard at CFA Institute. On behalf of CFA Indonesia, as the President of CFA Indonesia, I would like to first of all mention that CFA, in particular CFA Indonesia, is very supportive of the implementation of the Global Investment Performance Standard to be implemented in Indonesia. As we know, GIPS or the Global Investment Performance Standard is being used in the calculation and as well as the assessment, and also to present the report of the performance of investment of the companies globally. With the implementation of the standard of GIPS, will position Indonesian companies as well as the Indonesian asset management entities to have what we call the global passport, so that we have the same foothold to compete as well as to be able to present our performance in line with the standards that are actually being implemented by similar companies or similar asset managers in other countries. So therefore, the organization that is actually already implementing GIPS, of course, hopefully will have better confidence as well as have better trust from other investors that is actually using the information of performance standards. So I think today's webinar is an event for us to try to have more companies as well as asset managers to use the global best practices in terms of presenting the performance standards. And I think we would like, of course, to thank BP Jam Sostek or BPJS Ketenagakerjaan. As we all know, BP Jam Sostek or BPJS Ketenagakerjaan is the largest asset manager in Indonesia. Ya, Pak Edwin Ridwan, and I think BPJS Ketenagakerjaan is obviously using other asset managers in managing their assets, and therefore if BPJS Ketenagakerjaan is encouraging the asset management industry in Indonesia to use a better investment performance standard in presenting their performance investment performances, obviously it will drive a better best practices to be implemented in the Indonesian capital market. So with that, obviously we would like to thank BPJS Ketenagakerjaan for trying to initiate better practices in try to review as well as calculate the performance standards within the asset management industry in Indonesia. And overall, we believe that this will develop better trust and confidence, not only for the players in Indonesia, but also trust and confidence from investors that are actually participating in Indonesian capital markets from all over the world. So with that, we obviously would like to encourage all of the participants to see how the GIPS will be implemented in your respective companies so that Indonesia can have better standard best practices in calculation and presenting the performance of your investment. I think that's all that I want to convey in today's event. Again, thank you very much for Pak Edwin Ridwan for allocating the time to participate in today's event.
Thank you, Pak.
And also Pak Edi Chan. And hopefully these sessions will be beneficial for all of us. Thank you.
Thank you very much, Pak Pahala, for the opening address. I think we have the benefit of opening address of our president, who has also happened to have an overall look into the Indonesian state-owned enterprise, where Pak Edwin Ridwan is actually one of the directors. For next session, I would be inviting Pak Edwin Ridwan to give an keynote speech. Over to you, Pak.
Thank you, Pak Triyono. Bismillahirrahmanirrahim. The Honorable Pak Pahala Mansuri, the President of CFA Society Indonesia and Vice Minister of State-Owned Enterprises of the Republic of Indonesia, the Honorable Mr. Triyono, Pak Triyono Sudirjo from CFA Society, the Vice President of CFA Society Indonesia, Mr. Edi Chan, the Director of Professional Conduct Enforcement and Global Industry Standards at the CFA Institute, Edi Wijoyo, and everyone from CFA Institute, colleagues, distinguished guests, ladies and gentlemen. Very good afternoon from the sunny and beautiful island of Bali, Indonesia, where we currently conduct our meetings in Bali for BP Jam Sostek. First of all, please allow me to express my utmost gratitude and appreciation to everyone involved in making this event possible, both from the CFA Institute and BP Jam Sostek sites. This afternoon, with great pleasure, I would like to welcome all of you to the first collaborative event between BP Jam Sostek and CFA Institute, titled An Introduction to GIPS 2020. I hope this event will mark our first in series of events. We at BP Jam Sostek will collaborate in the future with CFA Institute. It's very timely that we hold this event today, as performance measurement and reporting lies at the very heart of unfortunate chain of events we in the industry currently face. We all know that unrealized losses suffered by asset owners like us, BP Jamsostek, has been at the heart of investigations by legal authorities in Indonesia. These investigations have ramifications not only to those directly involved, but also to the fate and future of our beloved financial markets. I strongly believe the industry and its stakeholders need to get a firm grasp of the very concept of performance measurement and reporting, and to agree on common standards to define what is gains and what is losses. Otherwise, confusion surrounding this matter of defining gains and losses will create unnecessary burden to the asset owners and its investment managers, which could potentially lessen or even stop altogether asset owners' participations in financial markets, especially equities. I think CFA Institute, with its GIPS standard, can help immensely to shed some light on this matter and give greater understanding of the need for common standards of performance measurement and reporting, not only to industry participants, but also to its stakeholders. GIPS standard compliance demonstrates commitments to the highest principles for performance reporting. It establishes a basis for fair competition across all markets and helps asset managers to compete as asset owners, such as BP Jamsostek, shift more assets toward private equity, real estate, and alternative investments, which we will pursue more going forward. I know educating the industry about GIPS standard, which is a golden standard for performance measurement and reporting, is no easy task. But with today's event, I hope we will create our first step to get all of us moving toward the right direction and get the ball rolling. I look forward to listening to today's talk, and I hope we can leave today with insights and better understanding of GIPS 2020 standard and how it may help us all in serving our clients and industry better. With that, thank you very much. I look forward to listening to the talk. Over to you, Pak Riono.
Okay, thank you, Pak Edwin Edman, and thank you also for the overview of the Indonesian investment management industry. And I think that's quite a good summary, and I hope this gives context so that our colleague Eddie Chan could enter into his presentation. Without further ado, I think let's get into the GIPS 2020. Eddie, time is yours.
All right. Well, thank you very much for the very kind introduction. Hi, good afternoon, everyone. My name is Eddie Chan. Let me first share my screen and show you the slides. So 1 second there. All right. And I am very excited to be here today. I just took a look at the participant list, and it looks like we have over 130 participants. That is very exciting. I'm very excited to be here to talk about the GIPS standards and also CFA Institute. I work in the Hong Kong office of CFA Institute, and my role is Director for Professional Conduct, Enforcement, and Global Industry Standards, covering the Asia-Pacific region. Without further ado, let's get started with the slides. Okay, so CFA Institute is a global association of investment professionals that sets the standard for professional excellence and credentials. We are also champion of ethical behavior in investment markets. There are currently over 170,000 CFA charter holders worldwide, located in 164 markets. CFA Institute is headquartered in Charlottesville in Virginia State in the US, with 8 additional offices around the world, and Hong Kong is one of them. And there are currently 161 member societies in the world, and CFA Society Indonesia is one of them in the family of member societies. I believe our organizational mission statement should sum up nicely what we do every day at CFA Institute. Our mission is to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. Now, let's go right into today's main topic. What are the GIPS standards? Well, the GIPS standards and its predecessors have been around for more than 30 years. Back in the 1980s, in many countries, there was concern about what was being presented to potential investors by asset managers and what was being called their past performance or their track record. Investors were aware that in some instances, the information being presented was being communicated through irresponsible and dishonest presentations, but there were no standards at the time in the 1980s. Industry research and studies began at that time. Then the initial voluntary practices started being introduced in North America and also in the UK. The GIPS standards is an industry standard, a common methodology established by the private sector as opposed to a regulation established by a government or regulatory body. The GIPS standards addresses the calculation and presentation of historical investment performance to prospective clients and investors. The GIPS standards is developed, maintained, and promoted through the collaboration of volunteers from the investment community, GIPS standard sponsors, and there are over 60 of them around the world, and also CFA Institute. By standardizing requirements for calculating and reporting performance that can be adopted by any entity in the world that manages assets, provides many benefits. First, firms can compete in all markets on an equal footing. Second, investors can better compare performance across firms and across markets. Third, asset owners can adopt a framework for reporting performance where no framework exists. They can be accountable to their own oversight bodies and stakeholders. Now let's look at some history highlights of the GIPS standards. In 1985, European Commission issued the first directive regarding public investment funds to facilitate cross-border retail investor offerings. It included a very simplified prospectus with required information. Then 2 years later, in 1987, the Financial Analysts Federation of North America published the Voluntary Performance Presentation Standards, the PPS. And then in the 1990s, both the UK and North America had published performance-related codes and standards. Several national performance-related guides also existed at that time, including Japan, Denmark, Germany, Netherlands, France, to name just a few. And then in 1993 and 1994, North America specific AIMR presentation, performance presentation standards was published. We call it the AIMR PPS, which is the predecessor of CFA Institute. AIMR stands for Association for Investment Management and Research, AIMR, and that is the organization before CFA Institute. In 1994, the president of the European Federation of Financial Analyst Societies, EFFAS, requested that there would be focus on one European solution for performance measurements and presentation. And following that discussion, in 1996, this organization, EFFAS, agreed that they would work with us, AIMR, to produce a common global standards. Then 3 years later, in 1999, when GIPS was originally published, 15 countries and EFFAS were members of the committee, with a further 10 countries contributing to the text. Initially, it was introduced as a core global standard that could include country-specific variations. The reason I'm telling you this is because the GIPS standards date back to the early 90s, and this required, this actually had gone through many rounds of discussion and agreement between different countries and different regulatory bodies to come to this final version in 1999. And then since then, we have had a few different versions that lead to the current version in the year 2020. I will skip it to 2011, which is the previous version. The 2010 version of the GIPS standard was published, and at that time there were 40 plus sponsors globally. So it had already made a global footprint covering 40 plus markets in the world in 10 years ago. And then last year in 2020, the GIPS standards was once again revised to keep pace with the time and to keep pace with the changes in the markets. And this is where we are at today. So why do we do all the updates? Obviously, we need to keep pace with the changes in the markets. The GIPS standards were initially developed for separately managed accounts. Composite construction refers to the process by which separately managed accounts and or pooled funds are grouped together for the purposes of performance calculation and reporting. But in the 2010 version, that version allowed pooled funds to be included in composites. In the newest version, the 2020 version, it provides additional options for pooled funds. I will go into a bit more details what it means by pooled funds, basically public funds like mutual funds that are sold to the public. To continue, the GIPS standards were initially developed for liquid investments, for example, listed debt and equity and cash. But allocations have generally shifted more toward alternatives over the last decade, it has become increasingly important for the GIPS standards to address the unique characteristics of alternative investments. Additionally, alternative funds and strategies frequently use pooled funds as the investment vehicle. Therefore, this point is also related to the one above. The GIPS standards are also based on a firm managing assets for clients and wishing to present performance to prospects. An asset owner doesn't have clients or prospective clients. Asset owners needed guidance that is not focused on marketing. And that is one reason why we update the GIPS standards to make it more relevant and practical for asset owners. In addition to the provisions themselves, the GIPS guidance is included in the handbook. Think about this. In in the last version that was released in 2010. Since then, over the last 10 years, there were a lot of authoritative guidance that were issued by CFA Institute to provide guidance on how to interpret these provisions. And a lot of these guidance are all over the place in different documents and also in the handbook, and a lot of Q&As and guidance statements. So another reason for the 2020 version to be published is to consolidate all of these into one place so that it's easier for the users to follow. Okay, so in 2010, there was just one document that contained all the provisions. In the 2020 version, it includes 3 separate documents, or we call them chapters, dedicated for each user group. Asset managers that compete for business, including asset owners that compete for business, they must follow the GIPS standard for firms, the one on the left of the slide. Asset owners that do not compete for business will follow the GIPS standards for asset owners. And the last chapter will be dedicated for verifiers, and they will follow the guidance in the GIPS standards for verifiers. Currently, over 1,800 organizations across 48 markets claim compliance with the GIPS standards. 85% of them had undergone third-party GIPS compliance verification. And 24 out of the 25 of the largest asset managers ranked by asset under management, AUM, notify us of their claim of compliance of their defined entities. As of now, there are over 60 local sponsors of GIPS standards. This is a good world map to show the footprint of the GIPS standards around the world in terms of global compliance, in terms of GIPS compliance. It is worth noting that the claim of compliance is included in the home country of the firm where it is domiciled. Therefore, we will see a concentration of compliance in North America and in the EU and in the UK. For example, both Hong Kong and Singapore are financial centers, but the number of compliant firms are low on the list. That is because many of the firms doing businesses in these places are headquartered elsewhere. I want to point out the 14 asset owners currently claiming compliance around the world. They are in the US, Canada, Portugal, Switzerland, Oman, Norway, Hong Kong, and Saudi Arabia. We are definitely receiving more inquiries from both asset firms and asset owners who want to know and learn about the GIPS standards for their longer term planning and strategies. Currently, 12 Asia Pacific markets are represented by GIPS standards sponsors. And you can see on the list, CFA Society Indonesia is one of them, covering the Indonesian markets. GIPS sponsors are responsible for promoting the GIPS standards in their local markets. And the definition of promotion in this context is to further the progress of the GIPS standards through active support and encouragement. It could include ensuring the GIPS standards are relevant and suitable for the local markets. It could also include providing market participants with general information about the GIPS standards. For example, this webinar organized by CFA Society Indonesia. I'm grateful to be here so that I can share more information about the GIPS standards with all of you on the call. Other responsibility would include encouraging organizations to comply with the GIPS standards and also identifying and encouraging individuals to promote the GIPS standards in your market. And lastly, it could also include working with regulatory authorities and other organizations to build market integrity using the principles of GIPS standards, which are full disclosure and fair representation, which I will get to in a little bit later in the presentation. This is a timeline to show the focus of the GIPS standards in the early days, in the more recent past, and in the current times. When all started in the 1980s, the focus was heavily concentrated in the needs of traditional asset classes like debt and equity, therefore heavy in the use of composites. I will also talk about composite in a second, so just bear with me for a second. Moving on, starting in around 2014, as you can see in the slide, we issued a guidance for asset owners, and we started to put more focus in this user group. In the latest version, 2020 version, the GIPS standards pay more attention to the needs of alternative assets and the use of internal rate of return, or IRR, in the performance calculation and presentation. The GIPS standards are designed for any entity that manage assets. We refer to two distinct user groups, asset owners and asset managers, or we can also call them firms. An asset owner is an organization, not an individual. It could be a pension organization. It could be an endowment, a foundation, or a sovereign wealth fund, or a provident fund, an insurer, or reinsurer, or a family office, or a fiduciary. They typically are accountable to an oversight body, a board of trustees, and are responsible for establishing investment policies and monitoring performance. An asset owner could manage investments directly or through the use of external managers. We will talk about requests for proposals a little later. On this slide, I want to focus on just 2 points. Compliance with the GIPS standards is at the firm level. It cannot be claimed on an individual composite or pooled fund or a portfolio basis. It is either a firm-wide compliance or no compliance. Second point, firms can obtain a GIPS standards verification from third-party consultant, or we call them verifiers. Usually the big accounting firms like the Big Four will offer this kind of service, and there are also specialized firms providing this service too. The incentive for a claim of compliance with the GIPS standards could be different in developed markets versus developing markets. This is our observation and insights. In developed markets, it would be a disadvantage when firms are competing for business because many asset owners will ask for it in their RFPs. More compliance across the industry will help rebuild trust in the market. On the other hand, in developing markets, many firms will find that compliance with the GIPS standards is the easiest way to gain equal footing with established firms. Why reinvent the wheel when there is a framework to follow? And there are plenty of resources to guide the process. When more firms are compliant, it will also help develop trust in the market. As a quick recap, the GIPS standards can help address the problems arising from so-called comparing apples to oranges. The GIPS standards can help asset owners compare performance across firms. All firms must report certain performance information, and include disclosures about the performance that is presented. Firms must also offer to provide information about all the products the firm manages, as well as the policies the firm follows for calculating and presenting performance. The GIPS standards require fairly presented and fully disclosed performance. Asset owners will be better able to make good decisions about external managers. The GIPS standards is a key tool that helps CFA Institute fulfill its mission of promoting the highest standards of ethics. As I explained earlier, the GIPS standards is developed through collaboration of volunteers from the industry and also GIPS standards sponsors from 40 plus markets, and also the staff of CFA Institute and myself included. While CFA Institute funds the GIPS standards maintenance and oversight process, we do not generate revenue from the GIPS standards. This global industry standard is made available to all market participants free of charge. Okay, aside from the fact that complying with the GIPS standards is the right thing to do, there are practical reasons for complying. For firms, many RFPs and databases inquire about GIPS compliance or may even require GIPS compliance, especially in some developed markets. As more and more firms comply in a specific market, it raises the bar for everyone. Asset owners can use GIPS compliance to limit their searches. It's an easy initial screening tool. Receiving standardized performance may also save time and resources when conducting a manager search. An asset owner may also have more confidence in the performance from a GIPS compliant firm because performance will be free from cherry picking. I already talked about how asset owners can use GIPS compliance as a criterion to screen out external managers to hire. I would like to talk about how asset owners can choose to comply themselves. Claiming compliance can add credibility to an asset owner's performance information, which is often calculated in an absence of regulatory requirements. Remember the world map earlier? There are currently 14 asset owners around the world that claim compliance with the GIPS standards. Some examples are AIA Group Limited, which is a insurance organization based in Hong Kong, but have business operations in many markets in Asia Pacific, which is a household name in many markets. Another example is Employees Retirement System of Texas, VaxCore Inc. in Canada, CalStrus and CalPERS, both are large asset owners based in California. One is California State Teachers Retirement Systems, and the other one is California Public Employees Retirement System, and other examples in the US as well. So these are large asset owners that claim compliance with the GIPS standards themselves. Okay, so this is a summary slide for what I discussed so far. I'll skip this in the interest of time. I will also share these slides after the presentation, so don't worry about missing out on the wording on the slides. Okay, so this is another slide to help summarize the reasons why asset owners should consider the GIPS standards. I'm checking the time, so I will also skip this one and do a deeper dive into the GIPS standards concepts. So these discussions will be based on the 2020 GIPS standards chapter for firms. Rest assured that these concepts are consistent in the other chapter, which is for asset owners. The coverage in the chapter for firms is more extensive. That is why my presentation is designed around this chapter. Conceptually, the provision in the 2020 GIPS standards for firms can be divided into three parts. General provisions, including sections 1 to 3, which includes provisions for input data, calculation and composite construction. Provisions for the preparation of the reports would be covered in sections 4 to 7. And the provisions for advertising would be covered in section 8. In 2020, there is one section for each type of GIPS report, whether it is for a composite or a pooled fund, and whether returns are time-weighted returns or money-weighted returns. The GIPS advertising guidelines provide options for advertising that a firm claims compliance with the GIPS standards. Words that appear in small caps in the provisions are defined in the glossary. So when you go into the actual chapter of the GIPS standards, you will see that the provisions, wordings in the provision would be in different fonts, and there are terminologies that are in small capitals, in small caps, small capital letters. Those are actually defined in the glossary. Note that in the 2020 version, there are no separate asset class sections for real estate, private equity, or wrap fee portfolios, as they did in 2010 version. Each section includes any asset class or asset type specific provisions. Okay, so let me just go over here. In the GIPS standards, there are 3 portfolio types. A portfolio is an individually managed group of investments or segregated accounts. Firms need to classify all portfolios because there are different requirements for different types of portfolios. Segregated accounts, it's a portfolio owned by a single client. And for a broadly distributed pooled fund, we call them BDPF. That is a pooled fund that is regulated under a framework that would permit the general public to purchase or hold the pooled fund's shares, and it's not exclusively offered in one-on-one presentations. So good examples are mutual funds that are sold by financial institutions or by banks that are made available to the public. And the last portfolio type in the GIPS standard is a limited distribution pooled fund. And that is any pooled fund that is not a broad distribution pooled fund. Example would be limited partnerships or private equity funds that are sold to not to the public, but to prospective clients. And usually they are offered in one-on-one presentation. A composite, excuse me here, a composite is an aggregation of one or more portfolios that are managed according to a similar investment mandate, objective, or strategy. Let me get all those, oops, let me go back here, there. As you can see, this is a demonstration of how the concept of composite works. imagine those squares are different portfolios managed by a firm. It could be a segregated account, and it could be a fund. F stand for those funds, and the different colors in those squares represent the different strategies or mandates, and they could be large cap U.S. funds, and it could be a strategy in high risk small cap fund. So depending on how it was defined in the investment policy statement. And in this particular example, this firm manages 25 different portfolios, and there are 5 different funds and 20 segregated accounts. And all actual fee-paying discretionary segregated accounts must be included in at least one composite. When I say actual, that means these are not simulation portfolio. These are actual portfolio, and there are real clients for these portfolios. In the 2020 version, the firm is not required to create a composite that includes only one or more pooled funds if the strategy of the fund is not offered as a composite strategy to segregated accounts. So let's focus on the right side of the slide. What I did here is to group those portfolios into different clusters. So you can see that there are 4 lime green colored segregated accounts. And so they are grouped together in this bucket, and we call that one composite. And that composite could be, like I said, large cap US fund, large cap US stock. It could be one example of that strategy. And you can see that the darker green colors, and there are 3 segregated accounts and 2 funds following the same strategy, and we would put them together in this second composite. And that could be, like I said, it could be a high risk, a small cap stock in the Hong Kong market, for example. And then there's a light blue color for those 5 segregated accounts and that one fund, and then also the darker blue one for segregated accounts and one fund, and also the last composite, the 5th composite, which is the purple one. And then you can see that there is a black color, and that is a strategy only available in a public fund, in a broadly distributed pool fund. So in that case, that strategy can be a composite by itself, but because this composite only has fund in it and there is no segregated account in this strategy, the firm has the option now to not create the composite. So it makes it easier for firms to manage pooled funds. So this is one major change in the 2020 version of the GIPS standards. In the interest of time, so I'm gonna speed up a little bit and go over some of the highlights. This slide go over the GIPS reporting requirements. These are pretty straightforward, so I'm going to skip that and let you read that afterwards. This is also a definition between prospective client versus prospective investors. So those are applicable to composite strategies and also and how prospective investors are more applicable to pool funds, and the terminology it's a little bit different in the GIPS standards. Okay, so this is also requirements for firms if they are operating, if they have segregated accounts, if they manage segregated accounts, limited distribution pool funds and broadly distributed pool funds, what are the reporting requirements in terms of timing, frequency, and who they need to provide the reports to. So that's pretty self-explanatory. So in the interest of time, I will also skip that slide. Okay, so this is a list for composite list and pooled fund list. I'll talk about this very briefly. When firms claim compliance with the GIPS standards, there are requirements to make available a list of composites and also a list of pooled funds to their prospective investors or prospective clients. And these lists will have to include the composite description and the general information about these composites investment mandate, objective, and strategy. So this is just to remind the firm that they need to maintain a list of composites and a list of pooled funds. It is because a lot of firms will have different strategies or different portfolios, every month. And you might wonder, what happened to the list? The answer is that list need to be updated every time a new composite is it's made available by the firm. Time-weighted returns. Let me check the time. So I think I'm going to have another 10 minutes or so. I hope the timing it's okay. So let me just go into the details of time-weighted returns and versus money-weighted returns. Time-weighted returns reflect the change in value for the period, but attempts to negate or neutralize the effects of client-directed cash flows. The time-weighted return multiplies the returns for each sub-period, which links them together, showing how the returns are compounded over time. The time-weighted returns, or I just call it TWR, helps eliminate the distorting effects on rates of return created by inflows and outflows of money. Whereas a money-weighted return reflects the change in value and the timing and the size of external cash flows. Think of a firm that calls capital from investors and distributes the proceeds. The firm should get credit for or be penalized for its decisions to call or distribute the capital. Time-weighted return allow for comparability across firms. Therefore, firms are required to present time-weighted returns unless certain tests are met, certain criteria are met. If the firm has control over the external cash flows and the fund or each portfolio in a composite meets at least one of the additional 4 criteria, then they can choose to report in money-weighted returns. And those 4 additional criteria are as follows. The first one is it is a closed-end fund. Second, it has a fixed life. Third, it has a fixed capital commitment. Fourth, illiquid investments are a significant part of the composite or pool funds investment strategy. Then, like I said, if this criteria is met, if one of the 4 criteria I listed is met, then the firm may choose to present in money-weighted returns. Okay, so this is a slide that talked about money-weighted returns in fuller details, and I'll just go over this very quickly. I have one note that talked about how much easier to calculate money-weighted returns if those criteria are met. the criteria that I just mentioned in my previous slide. So, okay, so in 2010, money-weighted returns were required for private equity composites. Real estate composites that included closed-end funds were required to present both money-weighted returns and time-weighted returns. These composites were required to present something we call since inception internal rate of return, SIIRR, through each annual period end. For example, assume that a fund started on, let's say, April 1st, 2014, and the firm presents performance through calendar year end in its GIPS report. The firm would be required to present since inception IRR from April 1st, 2014 through to December 31st, 2014. And then it will also have to do the same to the period December 31st, 2015, and then the next one, December 31st, 2016, and so on for every year. However, in the newest edition, in the 2020 edition, we changed the term from internal rate of return to money-weighted return. Firms have to present only one single return, which is the since inception money-weighted return. So in this particular example, the return would be from April 1st, 2014 through to say December 31st, 2020. So only one return would need to be presented. Okay, so I will skip to the next slide that will talk about verification. And this is, verification is a concept in GIPS standards. It is a process by which independent verifier conducts testing of a firm on a firm-wide basis in accordance with the required verification procedures in the GIPS standards. And the purpose is to add credibility to their claim of compliance. Firms and asset owners are recommended to be verified, but it's not required. Verification is testing performance by a qualified independent third party of certain aspects of a firm or asset owner with respect to their claim of compliance. A verification report is issued to a firm and is effectively a test of controls. A verification does not provide assurance on the results of any specific composite or pool of funds. This is a slide for more information about verification, and in the interest of time, I will skip that and let you have the slide later on, and maybe you can take a look at it on your own. I would like to point out the resources that are available for GIPS standards and where to ask questions, where to find resources. And I would like to definitely point you to the direction of the GIPS standards website, www.gipsstandards.org. It is dedicated to GIPS standards, and it is newly revamped very recently in April of this year. So I hope you will check that out, because it has been remade to make it more user-friendly and easier to navigate. And definitely the handbook for firms, and they are available on the GIPS standards website in the above website. I also want to highlight the help desk. We have a GIPS standards help desk, which is basically, an inbox where you can send all the questions to, and we have dedicated colleagues who will look after all the emails and all the questions in this inbox. And we have a service level of, I believe, 72 hours. So let's say 3 days. We would like to be able to return, provide a reply within 3 days, 3 business days. Oops, sorry. And of course, my email address here, eddie.chan@cfainstitute.org. You can always send questions to me. And if I know the answer, I will answer that directly. If I don't, I know where to find them, or I will also reach out to my colleagues at the help desk. Just one last slide here. I would like to point out that there is a brochure for the GIPS standards that have a lot more information, more so than what I talked about on this presentation, available on PDF, which we will be able to distribute this by email later on. Or you can also find that on the website that I mentioned, which is up here, the website. The link is right at the bottom of the slide. And on the right-hand side, I would also like to point out that there is a case study, an asset owner case study. We recently published that we collaborated with AIA Group Limited, and we interviewed AIA's CIO and their senior managers, and they talked about their journey, their own experience to GIPS compliance. And they talked about the challenges and also the lessons learned, the mistakes they made, and also the recommendations and advice to other firms and asset owners, when they are considering GIPS compliance. I think that's very handy because it's very hands-on, because these are real people talking about real experience, their own journey to GIPS compliance, and their blood and sweat, how they got through the hurdles to GIPS standards compliance. This is also available in the link below, and also we have that on PDF format that we can also distribute via email to you. On that note, I'm going to pause there and pass it back to our moderator and see if there are any questions from the audience. Thank you.
Thank you, Eddie. That's a very illuminating presentation. I think for most of us in Indonesia, GIPS standards are relatively new. Probably it's not widely known. I noted that there are several developments that we already see in the although the GIPS standard have been around since 30 years ago. Now you accommodate the pooled funds, and to make it more relevant for different asset classes, including alternative investment funds, probably private equity or hedge funds, and also a better applicability for the asset owners. You also have issued certain guidance for verifiers and asset owners and for the firms. I think we have already 2 questions here. Let's go to the first one from Pak Sulat. He's one of our member, primarily focused on the education activities for organizations that want to comply with GIPS. How to start the process? I think let's go with that first. Eddie, over to you.
Sure. That is obviously a very broad question, but also a very popular question. Of course, I guess I would say the first process is definitely understand the concepts of the GIPS standards first. Of course, it's a daunting task. I'm not going to lie to you about that. It is even the handbook has a lot of pages. So I would definitely go with the brochure to understand the concepts of the GIPS standards first, because that's a brochure. It's only about 12 pages as compared to whole handbook, which is hundreds of pages. But more pragmatically or practically, what I would suggest is to decide on how you would define the firm for the purpose of GIPS standards, because it will definitely provide the right direction as to how else you would want to classify your composites, and how you would, I should say, design your composite, meaning how inclusive your composite would be, because the composite definition could be very broad, and you could have, like I said, you could have a large cap U.S. stock composite, but you might wonder, so what define as large cap, right? So it would be up to the firm to decide how they define that composite, right? So if you define the composites wide enough, then you would only have a handful of composites. But if you define your composite very unique, in a very unique fashion, then you might end up with hundreds of composites. Then it might also make it very counterproductive. Then it would be very hard to manage. So that would be a balance that each firm would have to look at, considering their own portfolios and also their own strategies, what kind of businesses they are in. So that's why I would start with the definition of firm and decide from there, and that would provide a platform of how to go on to the next step. I hope that answered that question.
Yeah, thank you, Eddie. Let me slightly deep dive on the first question from Pak Sulat regarding on how to comply. A bit of a background. I myself I'm from the Big Four, so probably I falls into the consultant / verifiers. So I see this that CFA Institute have or GIPS have some kind of a list of service providers. You have IT consultants, you have consultants itself who help you with the business process probably, and you have to have the verifiers. In your view, how important is this three professional services providers, the IT consultant, the GIPS consultant, and the GIPS verifiers in helping funds getting into compliance with the new standard?
That definitely would be helpful to work with a verifier to get started, because a lot of these verification firms, like I said, for example, large accountant firms, they have experience helping their clients achieve GIPS compliance, meaning they have the experience and they know what to look for. And so obviously that would be beneficial to work with a professional already had that experience. And we do have that list available on our website. If you take the time to go to the GIPS standards website, there you will be able to find a list of service provider, and we do not endorse any particular one. We only provide a platform so that service provider could list themselves on the website, and when they tell us that they want to be listed, we just put them on. We do not favor one over another, put it that way. And so but you would be able to find the list, and you would be able to find where they provide their service, and a lot of large Big Four accounting firms based in, for example, Singapore or Malaysia or Hong Kong, they usually have teams covering all of Asia Pacific, and they usually would be able to get you some answers. Yeah.
Okay, thank you, Eddie. So usually in the Big Four, it is called non-audit assurance service, because this is one of the assurance service, but it's not part of the mandatory statutory audit. So before I go to the next question, actually, I would like to invite to all members, If you have any particular question that you want to address directly, you can raise your hand in one of the function there. You can raise your hand and Eddie will jump into your question directly. So let us go to the next question from our member here, Pak Kunchoro. In the case of most of Asian countries and especially Indonesia, what is the main causes or constraints with the low, in regard to the low number of GIPS compliant companies? Over to you, Eddie.
That's a great question. I would try my best to answer that. And I think there are many factors. Obviously, on the world map that I showed earlier, a lot of the complying, let's say a lot of the numbers would be shown in, say, North America, and also in the EU, in European Union, in the UK as well. And I would attribute a lot to the fact that it has a longer history in those countries. It's just, first of all, GIPS standards, the name itself, and also what the framework entails too, had a longer history in those markets. And I would go back to my timeline earlier that a lot of the history actually started in North American markets and the EU, in the UK. And so it just had a longer history. So, it just, over time, there are more firms complying to it. So that is a huge factor. And the second factor that I would like to discuss is, I would also look at, like, say, Hong Kong and Singapore. These are financial centers. Why are the numbers so low? And one of the reasons that I would be able to provide is the fact that a lot of the businesses operating in these markets, let's say here in Hong Kong, they are GIPS compliant, but they are not counted here because they are, they're headquartered, domiciled back to the US or in the UK. So even though their operations here are GIPS compliant, they are following all the policies and all the framework of procedures, they're not counted here. So it's sort of like, okay, we don't get counted, but we are actually compliant. So one example is JP Morgan. Obviously, it's got businesses everywhere around the world, and it has a huge APAC headquarter here in Hong Kong, but it's counted in the US. So it's, I would say that is one big issue, not issue, just one situation leading to that. As for Indonesia, we are hoping to change that. We're hoping to provide more resources so that we could help firms understand the GIPS standards and why it would be beneficial for them to consider it and claim compliance down the road. And I mentioned the benefits. One of them is, gaining an equal footing to compete in the world financial markets, because it's already well accepted in many markets in the world. So for a firm, a locally grown firm, for example, in Indonesia, if they are following the same framework, then they could definitely, they already rise to that equal footing so that they could compete equally with their competitors, rather than trying to prove that, they are equally good. And there is the credibility element to being compliant with the GIPS standards. And I would stop there and see anyone wants to add to that.
Okay, thank you, Eddie. So perhaps we open to the other audience in case you have any question. We have around, I think, about 8 minutes before the end of this session. There is from Yenita Siregar. Yes, please. Pak Rahmat Halim, how do we allow Yenita to raise her question?
Ini coba tolong di unmute Bu Yeni. Speakernya tolong dinyalain.
Kalau enggak, Bu Yeni, kalau nggak bisa unmute, diketik juga boleh pertanyaannya, nanti saya bacakan. Silakan. Mungkin harus dibantu di unmute, Pak Rahmat.
Sudah dipencet sih Pak, tapi it doesn't, nggak keluar ini.
Okay. There is another question there from Arnendra Vimardano. Okay. How do asset owners assess whether the fund returns offered by the external managers are generated from quality underlyings or good standard of investment process? Okay. Maybe over to you, Eddie.
Sure, I'll try to understand this question. And I think if I understand this question correctly, I think this is exactly why that is exactly why I'm here to talk about why asset owners should consider asking questions about GIPS standards. You're right. Right now, you know, I should say without any standard, without any framework of reporting investment results, it is indeed very difficult for any asset owner to assess whether the fund returns offered by external managers are quality or not. It is really difficult to make any comparison because there are no, you know, equal ground. There's no a standard to do that comparison, and that is why I think there is potentially a huge problem with cherry picking results by asset managers. They could be showing their best years, and they could be, you know, hiding the bad years, and you know, if there are no standard, then obviously it would be very difficult for asset owners to compare and assess the fund returns. And that is why I think asset owners such as BPJS, you know, they are in the position of power, you know, because if they are in the position to hire external managers, you know, they could send a message by inquiring, by asking questions about fund returns, how they are reported, and what needs to be disclosed. You know, it's actually a good point for me to segue to what I want to say about our overall strategy here at CFA Institute. We want to ask asset owners to ask questions about GIPS standards. We're not asking asset owners to make it a requirement, because that would be very hard to, you know, overnight and make that change. That we understand it's not practical, but we do understand that asset owners around the world, they are in the position of power or negotiation to start asking questions. You know, if they raise the bar just by asking asset firms that submit the proposals to have more integrity, or to have more standards in their reports, then over time we would be able to slowly and gradually raise the bar. So this is our mantra, which say inquire about the GIPS standards, not to require. We would just say inquire about it. You can ask questions, but you know, if you don't think it's ready don't make it a requirement, but you can ask questions. You can also make it raise awareness from that perspective. So this is where I would stop. Oh, you're on mute.
Yeah, thank you, Eddie. Maybe Ibu Yunita Siregar, you are ready to ask your question? No, probably still busy. Okay, we still have around 2 minutes question open to all members in case you want to ask any question. We still have a few minutes.
And feel free to reach out to me by email. I will be sharing, we will be sharing the slides after this by email. And I will also be sharing the 2 PDF documents as I promised. One of them is the brochure, the GIPS standards brochure, which is only about 12 pages of colorful illustration of history and also what this is about. And the second document is the AIA Group Limited case study, the AIA's journey to GIPS compliance. I really urge you to take a look at it. You can pick up the sections that are interesting to you. I find the GIPS, I find the case study very interesting because we did interviews with the CIO, we did interviews with the compliance director, and they talked about their point of view and also the challenges that they've gone through. And this is, and I promise you, is a very easy read because it's like an interview. So you will see some questions and some answers. And I would find that very interesting to get a feel of the mindsets of those senior managers at AIA, why they decided on this big project and what they had learned coming out of it, and their insights, valuable insights that they share with the readers, with the world. So I would urge you to do that, and feel free to reach out to me by email.
Okay, thank you. I think we have come to the end of this program. So I let me summarize. GIPS are continuously updated to follow the development of the capital market. So we have introduction on the alternative assets. We have introduction into the asset owners, and also more and more supporting professionals, helping industries to seek compliance to the GIPS standard. At the end of the day, this is an industry initiative. It's a voluntary basis. Probably it's not yet as quasi-mandatory as a accounting standard, which has been actually quite a mandatory, but it is actually helping the industry to grow further, to compete on an equal footing. With that, actually, we have come to the end. On behalf of the CFA Institute and CFA Indonesia, I would like to say our gratitude to Pak Pahala Mansuri as the Vice Minister of State-Owned Enterprises, and Pak Edwin Ridwan on the sponsorship from the BP Jam Sostek. Thank you very much, and that concludes the end of this program. Thank you. Thank you very much.
Thank you very much.
Bye-bye.
Bye.